All right. It's the 24th of September 2024, and we have about 15 minutes to the New York Open. So let's get to our charts and do our analysis as usual. Okay. Um, this is the daily chart. Now, as I said, I don't pay much attention to the daily or the weekly charts for session trading because it's not really important. All I'm doing is I'm trying to look for a high liquidity zone based on the H4 time frame. If it's not visible on the H4 time frame, then I refine it using the H1 time frame. But basically, I'm looking for a high liquidity zone on the H4 time frame to take a trade during the New York session. That's the first 2 to 3 hours of the New York session. That's my trading window. The first 2 to 3 hours of the after the New York Open. Okay, but just for the sake of an exercise, let's just look at the weekly and the daily. So the weekly we've closed above 2,600. We are heading towards 2,650. We said this yesterday as well. And on the daily, we have closed a small body bull candle. Uh, so price could easily push up and continue to 2650, or we could have a pullback here, right? There is no information on the left, so all of this is just guesswork, right? Completely guesswork, because there is no information on the left. If there was some information on the left, then there is a probability of something happening uh, against something else. But right now, there is nothing to the left. There is no information. So we're guessing. Price can go up, price can go down. It's just complete guesswork. Okay. But we are in a bullish momentum. You've got to keep that in mind. I doubt there will be any H4 supply zones above current price. Let's go to the our trading chart. Um, yeah, let's go to our trading chart here. All right. Now, yesterday, before I start the analysis, I just want to point out the fact that I made 1.98%. I recovered yesterday's loss. So yesterday I had a loss of about 2%, about 2% loss yesterday, and I recovered that 2% loss with one trade, right? And I'll show you where I took that trade. It came exactly to the zone that we had marked at the end of the session yesterday. So if you look at yesterday's stream, look at the last 15 minutes of the yesterday's stream, you will see that I marked this fib, right? And I said price is very likely to come to that candle, that single candle there, right? The fib was marked on it. We had marked this as a high liquidity zone, and right at that high liquidity zone was a liquidity candle, and I said that price would come there, and if it does come there, then I might be interested in taking a trade. But it didn't come there during the New York session. It didn't come there the next day in the Asian. It didn't come there today in the Asian session either. It came close, but it came in the London session, and it tapped that. It tapped that and created this huge wick. That's grabbing liquidity from this candle. This because this candle was created during the New York session, right? So we grabbed liquidity. As soon as I saw that liquidity grab in the London session that happened, yeah, in the London session, if we go down to the 1 minute time frame, 10:30, go down to the 1 minute time frame, even the 5 minute, yeah, there you go. So you see that candle, that's a liquidity grab from that fib level, right? Which we had drawn yesterday or based off that 15-minute liquidity candle, right? And it touched it, and then we went up 125 pips. I closed most of my trade here at around 100 and at the top of this SR level. There was a resistance level here that we had drawn again yesterday. We had drawn all of these levels yesterday. So it reached that. I closed the trade because that's the end of that move. I was not anticipating price to go any further. It could have. but we don't know. This is all the information we have here. We've got some resistance here, and price came and hit that, and now we've got a massive pullback right now, right? So that was about risked about 35 pips and took about 111 pips. I think that was about a three RR trade. So that recovered yesterday's loss in one trade. Um, that's the that's the key to the way I trade. That I'll wait for price to come to high liquidity zones, right? Like here, it came to high liquidity zone. That's an area of interest that I had marked yesterday during the New York session. Waited for price to come there. It did come there, and we got a reaction, and that was the reason I took the trade. So even though I had a loss yesterday, with this kind of system, it's with with the next win or with the next two wins, you can easily recover the previous loss, right? That's the whole point. You don't have to wait for 5 trades or 10 winning trades to recover one loss. With a single win, with a single winning trade, you can recover the loss and make some more. Okay, that's the point of this. Okay, let's clean our charts. And let's start with the H4. Let's go to the H4 time frame and start with the analysis for today. Let's get rid of all of that. Let's get rid of that. Get rid of that. Okay, let's keep these zones. These zones haven't been touched. I don't want to redraw them right now. Again, just to save time, but let's. Um, okay, so it's looking really ugly. That's all I can say. It's looking really ugly on the H4 time frame. Okay, so this zone hasn't been tapped yet. I'm gonna extend this to the right. Okay, it's looking very ugly. We have a drop and a rally here. Price has come close to that, hasn't touched it. But if you go to the H1, yeah, we've come close, but we haven't touched it yet. Okay, so I'm going to leave that as it is. On the H4, there is a rejection there, but there is nothing clear on the H4. So here there would have been a zone there because a rally and a drop, and price didn't come down, but there is a drop there, and price wicked through this. So we have to go down to the H4 H1 and kind of clean that zone up, and it's something like that. Okay, that's what it looks like. It's already been tapped once. um, yeah, that's what it looks like. It's very ugly, very ugly on the H4 time frame. Okay, this will extend this to the right, so same with this, right? Okay, now yeah, I don't know, it's very ugly. Anyway, let's this is what we have. Let's see how we can complete some sort of a decent analysis with this kind of price action. I'll be very honest. I hate trading when price is at all-time highs because I'm a session trader, and for a session trader, I'm basically trading 2 to 3 hours in the New York session, right? All I have right now is possible demand zones, right? What I would like to have is during a session, during 2 to 3 hours, to have a high liquidity supply zone and a high liquidity demand zones, right? I would like to have both of them because that gives me a dual opportunity, either to take sells or buys within those 2 to 3 hours, right? But in this case, I've just got range in candles here, right? For 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So for about 40 hours, price has just been ranging in this. Yeah, that's 2 days. Price has just been ranging for the last 2 days. So since end of Friday and right until now, we're just ranging. Okay, so it's ugly. It's very ugly to trade from. Now, let's see if this is a high liquidity zone or not. Um, Yeah, it did take out this. This move took out that, so this becomes this is a high liquidity zone. I'm gonna keep that as a high liquidity zone. Um, it is on the H4 time frame, so that open is 164 and 392. Let's see if those digits are correct. 164392 correct. Yeah. So that's taken out there. We'll delete that. So that is a high liquidity zone. So I'll be interested to see what price does when it gets there. The top, the supply. This took out that demand there. We have a drop, a base, and a rally. That move took, but we've tested it already, and this happened. This was a move up that price went into the trade that I took from here. So that price did go test it. Because it's tested, I'm not going to consider it as high liquidity zone anymore, but it is some sort of a H1 there is H1 H4 reaction there, and there is H1 supply there. So I'm going to mark it as H1 supply. Okay, right. Okay. Okay, so we got H1 supply there. Let's get rid of that. Okay, that's what we've got. Okay, now on the daily time frame, I have daily support there. I have some sort of support level there. I have resistance there that's nowhere near current price. So we're going to ignore any daily SR levels. There's nothing near current price, right? If you go here, our closest resistance is there and our closest support is there. So all here up to about 450 pips, there is absolutely nothing. There's no daily SR at all. This 2600 level could be important, and very close to that we've got this H4 demand. Okay, so that's what we got today for the New York session. Um, okay. Yeah, it's just go and put these. Okay. Um, Previous daily closed a small. Okay, so let's just see where the London high was. Um, that's not the London high. That is, so that's the Asian low, right? Let's just put a mark there. I just want to, that's the Asian low. That's the Asian high. And then we had the London high. Sorry, that's the London high. That's the London low. Sorry. Sorry. All right. So that's the Asian low, that's the Asian high, that's a London high, and that's a London low. So all what London did was trade above the Asian high, close back below the Asian high, come back and trade a little bit below the Asian low, and then go back up. So that's the range that we've been trading, right? So it's basically grab liquidity, which it usually does. It grabbed liquidity above the Asian high and came down, grabbed liquidity below the Asian low and went back up. Okay, that's all it's done, and now we're coming back again. Now this is the New York Open. Um, so yeah, so for buys, that's a good area to wait at. Um, okay, right. Let's get rid of these. We don't need this. Just wanted to have an understanding of. I don't use these in my trading, so that's why I'm going to get rid of them. This is just to understand what price has done today. All right, that's the purpose of this. So when you when you understand the time the Asian session, trades in the since the Asian Open. So on my server, it's around 3:30 is the Asian session open, and then around until about the first 3 hours, right? So that's about 6:37, right, on my server, on the IC market server time, right, which is around there, which is around that candle. Then after that, it's just ranging for London, and then that's a London opens at around 8:30 on my server time, and then that's the London low. So that's the first 3 hours, first 2 to 3 hours again. So that's the high and the low. But I don't use that in my trading. Okay, I just wanted to understand what price has done prior to my session, what it did for the day. That's what it's done for the day. We created an Asian low, created Asian high. Um, Then the London session grabbed liquidity from the Asian high, came back down, grabbed liquidity from the from the Asian low, and traded back up into that range. So within that range is about a 175 pip range. All price has been doing has been trading within 175 pip range all day today. Okay, so let's get rid of all of that. Okay, now what we are going to do, what I'm going to do now, is to um, see where price can come to for a possible reaction. Now, that candle was important. That was a liquidity grab, right? 17 pips. That was in the New York session, grab liquidity, and we went up. Now we haven't touched this zone yet, but we have touched that candle, right? We may in fact come to the, I think the midpoint of that candle, was it that it price came down to? No, not to the mid yet. Um, okay, so yeah, we didn't come to the midpoint yet, right? Um, Now, because price has already come to that candle, I'm not going to take a trade even if you get a reaction here or here. I'm not, because if price hadn't come to that candle, hadn't touched it at all, hadn't come anywhere into the start, anywhere in between the start and the end of this fib that I just drew, right? So that's the candle that I had an eye on yesterday towards the end of the session. Um, During the New York session, that's what the candle that I had an eye on. I was hoping during the end of the session price might come there. It didn't. It was very slow because it was a Monday. We ranged a lot right from there until here. We just ranged for the rest of the session, right? So we had some unimportant news yesterday, and since that news event until the end of the New York session, or until the end of the day, price just ranged, didn't do anything. Okay. Then in the Asian session, we tried to come there, we couldn't. It just spiked up, went all the way up, did grab liquidity above it. In the London session, we came to the candle, right? Perfectly to the candle. I took that trade, and I got about 3 RR on that trade, and that's how I was able to recover my loss from yesterday. Um, Now, since we already have come to that candle and grabbed liquidity from it and moved 125 pips, I'm not going to place any pending orders here or here. I want to see what price does when it gets to this area. So I'm going to leave the fib there. I'm going to put the right values and leave the fib there, but I'm not going to place any pending orders on it. 363010. Okay, right. Now, so what I want to see, I might see if I'll get another M15 candle here, right, in this area, either here or lower here, which will grab liquidity from this high liquidity zone. That is why I mark these zones. They're marked because that's where I'm going to wait. I'm going to wait at this green box for price to come into it. That's why I marked it now, prepared for the NY session. I want price to come there. Okay. Here, the reason I took the London trade here and I didn't wait for it to come here because I was targeting this one candle, right? And it did come there, and I got a reaction, and I showed you what it looks like on the M5. It was a perfect, some traders call this a pin bar or a shooting star. I don't know, whatever. I don't give it names. It's just a grab of liquidity from an area of interest. To me, I've said this several times. These fib levels are very important. They're drawn in a certain way because price reacts to them. You can see how price bounced, is reacting to this here, and now it's pushing down exactly to the pip, to this level, 2627, 2627.25 or 2627.50. It's perfectly reacting to that and pushing down, okay? And it should come all the way to this green area without a problem. But we're going to wait. So it price did exactly what I was anticipating it to do. I got a trade off that candle, which was great. Now I want to see what price is going to do in the New York session. All right. So this is the first 15-minute candle of the New York Open. We are pushing down, and we've been pushing down from here. So this too um, there was a rejection here on this rejection happened in the Asian session. This rejection happened in the Asian, no, in the London session, during the London session. Yeah, yeah. This rejection, this massive push down happened during the London session, creating some sort of supply there, right? So, as I said before, if it looks like supply, there is supply. If it looks like supply, there is supply. So there is sorry. So there is some sort of supply there, but it's not visible on the H4 chart because the H4 time frame looks really ugly. So when we go down to the H1, you can see it. It's clear you have a rally, a base, and a drop. And that drop took out this demand zone here. There was a demand zone here. It took out this demand zone. It took out this demand zone. This moved down. And that is why during the London session, this would have been a high liquidity zone to trade from. And price did touch that and reacted. But now for the New York session, to me, this is no longer a high liquidity zone because it's already been tested once. So once price tests it once, I don't consider them a high liquidity zone. They are a zone nevertheless. They are supply nevertheless, but I don't consider it a high liquidity zone. Okay, so if you go down to the M30, it's even clearer. You've got there. Now that's interesting, but I'm not going to place any pending orders. Price hasn't come there. That's the start of the drop. So I just want to have a look at that candle, what that candle looks like on the M15. Right. Yeah. So perfect. So that was the rejection candle during the session, and um, if I had seen that during the New York session, this is how I would have traded it. So that's how I would have traded. That's how I draw the fib because that's a liquidity. That's you're grabbing liquidity. This candle is grabbing liquidity. You can call it a falling star, shooting star, pin bar, whatever it is, but that's a liquidity grab. That wick is a liquidity grab. Clear. The best way to see them are on M15. You can see them on M5. You can see them on M30. You can even sometimes see them on the H1 time frame. But the best time frame for me to see them on, when I see them on the M15, I really like them. And you can see how price came to that wick. See, the next candle came back to that wick, grabbed the liquidity of that candle, and then push down all the way down 160 170 pips all the way down from there. So that would have been, so if this happened in the New York session, I would have placed my entry there. Stop loss would have gone above 7 8 9 pips and then ride it all the way down to the demand zone, right? Because that's where we should come. Now price has, it came almost down there, then it came back up here, and now we're pushing down. So now when price comes back here, um, because the liquidity of that candle is already been consumed by this, I'm not going to place any pending orders and wait. Again, I'm going to see how price comes there, how it reacts in that area. Depending on that, I will see if I need to take a sell trade or not. But I'm not too interested in this area because price has already come into it, has already tested it once. I don't consider this a fresh zone, and I don't consider this a high liquidity zone. Okay, but it is supply, so I'm going to watch that area. Um, yeah, so now we're going to wait. We're going to wait um, to see what price does um, in this area. This low broke below this low here, and this happened pre-NY. Let's see what it looks like on the H1. Nothing much. M30, it looks like that. M15. Let's see what it looks like. M15. Yeah, nothing much on the M15 either. Just 3 wicks there. 10 pips. 18. Okay, so I want to see if price gets down here to this area. Okay, to this candle. The stop loss is too big, so I'm not going to place any pending orders or anything here. I just want to see what price does. First, it's got to get past this fib. Now, these fib levels, price is going to very likely react to these levels. It's already reacted to this now. 2623, 262363 all reacting here. Then the next one 262186, then 262098, then 262010. So there is quite a bit of work price needs to do if it is supposed to, if it is meant to head down, right? We're a long way from that. We're about 85, 90 pips from that candle. So let's see what price does. But I do want to mark that area. I'm gonna, yeah, I'm gonna keep this. I'm gonna keep this box here. 728, 542. 728, 542. Okay. um, yeah, I'm gonna pay attention. Just maybe change this color, otherwise I'm gonna mess this. That's better. And on the 34, 4. All right, we are coming down. Um, Let's look at the 5-minute time frame. Yeah, so basically we have support here. I'll just draw these support levels. It's not that I don't use these. Please keep in mind I don't use these support levels that I'm drawing to take trades of. I'm just drawing them for um, for those who don't know how to draw support resistance correctly, so that you can um, learn how to draw it. Okay. Let me zoom in and show you why I drew it where it is. Okay. You can see that price here. This was the first place. Price pushed up, reacted quite a bit here, and then pushed through. Right. So that high is important. 420. Um, okay. And then you can see how price here. This big move right at the top, at the bottom of that. Right. Then again we reacted there. Um, yeah. So and that low 4 5. Okay. So basically, four, okay, 24. So a candle needs to close below 26.24. An M5 candle needs to close below this, or M15 candle, better yet, an M15 candle needs to close below 26.24 for price to continue down. If it does close below it, then the next candle will probably push up, grab liquidity, or create a top wick. They mean the same thing. Grabbing liquidity or creating a top or bottom wick, they mean exactly the same thing. So it'll probably, go up, create a top wick, and then continue down. Okay, but an M5 or M15 candle has to close below this gray area, right, that I just drew. Below this, you can even extend it down here. Yeah. Three 368. Okay. Yeah, that's better. So M5, M15 candle needs to close below this gray area, and if it does, then we push further down. Um, price has to push. Price has to come into this area for me to be interested in taking a buy trade today. I'm interested in buys more than sells only because there is no information on the left for any high liquidity zones. There's nothing. We're at all-time highs. We don't have any zones above, current price, interesting zones above current price. So unfortunately, there are no high liquidity zones. There are no high liquidity supply zones to take trades from. All I have is high liquidity demand zones, right? So this is the area that I'm looking for price to come to. Um, let's just go to the, yeah, so hmm, yeah, the EMAs are flatlining. This is also another good kind of sign. I mean, it's a bad sign that price is just ranging right now, because it's not a good sign. It's a it's a good tell, but it's a bad sign that to take a trade, because that's the fast EMA and that's the slow EMA. They're just flatlining right now. Okay, uh, price is just at a stalemate. So yeah, it's just we gotta wait. Um, this broke this low. This respected this low. Right off this, we could push up here. We could push up a bit. We did come deep there. We retested it again. We pushed up. We could push up to that area there, or even higher up there. Yeah, we could push up somewhere there. But that's a reaction to this demand zone, H1 demand zone, right? So rally, two basin candles, and a move up. Two same color candles moving up. I've said this before. That's what I like to see. Two same color candles pushing up, right? So we have a rally, two basin candles. It's right at that H4 demand zone. Okay, right at the H4 demand zone is an H1 demand zone. So rally, two basin candles, and these are the two um, leg out candles. So leg in, this candle is a leg in, two basin candles, and the leg out. So if I were to show you how I draw that demand zone, it would be exactly like this. Right? That's how I would draw the demand zone, right? So leg in, two basin candles, and the move up, the two same color candles moving out, right? Price tested it once, it tested it twice, tested it three times, tested it the fourth time. Okay, so there is no way that I would take a trade in this once it's tested it so many times. Now, I wasn't trading the Asian session, so um, I just kind of ignored this because I wasn't trading the Asian session. But when it came deep into this, um, into the zone, when it came deep into the demand zone, and this demand zone has taken out this previous supply, so this demand zone has taken out this supply, so it is a high liquidity zone. And also, um, when it came to that candle, right, that was the M15 candle that I was targeting. When it came to that M15 candle, which is also part of the demand zone, that's when I took the trade, right? Because that candle is a part of that zone. If that candle wasn't at a part of zone, I would have waited for it to come to the candle. But that candle was a part of the zone, so perfect, everything aligned, all the ducks were in line. So I took the trade, and thankfully it worked, and I was able to recover my loss from yesterday. So now we are touching it for very bad throat. Yeah, so we're touching it now for the fourth time. 1, 2, 3, 4. So I very you might not get a big reaction here. I don't know. I don't know what price will do, right? Because we don't have much information to the left. So price is very bullish, so I don't know if price will just use this zone and continue in the New York session to go higher, or we are going to come deeper. But because the zone has been tapped so many times, I'm not going to be taking another trade from it here. Absolutely not. I won't take another trade from it here. I'm going to wait, right? Because my assumption is that price is going to come in deeper to grab more liquidity. Either come in here deeper, break this zone, go to the next one, or create some sort of an M15 setup here, grab liquidity, create a liquidity wick on the M15 somewhere in this area, and then push up, right? So I'm going to patiently wait for that to happen. Yeah, okay. Two double 5 9. News today. So yeah, we have some news about an hour and a half from now. The news is right at the close of the open of the new H4 candle, okay, or the close of the current H4 candle. So it's not an important news event. I don't consider these as important news events. The only somewhat important news event this week is unemployment claims, which is on Thursday, right? That is a bit important. And then there is a Fed um, announcement. But this is not a this is just an announcement. It's not a there is no release of any numbers. This is just an announcement. So around on Thursday, around just after the news release or with the news release, there might be some volume in anticipation of what Jerome Powell is going to say. But other than Thursday, none of these are important. Friday also, it's not that important. Today's news event is not that important. Even though they're red folders, they're not very important. In terms of news, what happened today? Nothing much. Yeah, it's just, yeah. Um, yeah, price has been quiet today. It's not much happened. We've just traded within 170 pip range today, and that's quite low for gold. Gold generally, gold's average daily range is about a healthy average daily range for gold is about 250 to 300 pips. So we've done just like about 170, which is one third of that, two thirds of that. Sorry, yeah, almost two thirds of that. So there's nothing much happened today. So let's see if price comes to this green area today, if we can get an opportunity, or if it does not, then it just decides to continue up like yesterday. Like what happened yesterday. Yesterday, it did not come. It just continued up and just ranged, and that's very possible too. The price does not come in the New York session, doesn't come here, and just either goes up, just ranges in this area, in this 180, 185 pip range, and it doesn't come down. That's possible too. But I'm going to wait here. I'm not going to do anything. I'm going to wait at this area for a trade. That's where I believe I'm going to get a low risk, high reward, high probability trade. That's the way. That's the the name of this system. That's the name of this system that I'm showing. The way that's the name of the system that I'm showing right now. Um, during the live sessions. Low risk, high reward, high probability setups or entries. So that's what I'm trying to show here. And none of these 1 RR, 2 RR trades. The trade of the opportunities here have very tight stop losses, and high reward potential, right? If you get the trade right. Now there are many times that I get the trade wrong. There are many times I get the setup wrong. I get the candle wrong. I don't draw the fib correctly. All of these things can happen. That's human error, um, and that. But the winning trades more than make up for all those mistakes, right? The winning trades, they make up for those mistakes because they're high reward trades, high RR trades. For some, they want for some traders, a system like this doesn't work. They want a very high win rate, and either 1 RR or even willing to take negative RR trades. I'm not like that. So um, if you do like the way I trade, then I welcome you to watch these streams, watch all of my videos, several times over, make notes. Um, you know, I'm there on Twitter as well. You can post a message. Send me a private message um, on IG on IG or on X, and I'll be happy to answer it during the sessions. Yeah, very similar to what happened yesterday during the New York Open. We just after New York Open, we pulled back a little bit, and then we just continued to push up for the New York session. And during NYSE as well, we just continued to push up, and that was it. And then that was so I don't know if that's going to happen today as well, because an M5 candle or M15 candle needs to close below this gray area for price to come down. If it doesn't, then we're either just ranging here or we're just pushing up. So this SR level, support turn resistance, resistance turn support, is visible on the H1. It's visible on the H4. It's visible on the H4, right? See, tapped, closed up, tap, tap. It's H4 candle has not been able to close below this. It just has being above. Previously, if you extend this further, 17, 2017. All right. If you extend that line further on the H4 time frame, you can see how When price touched it, it responded, it reacted to it and pushed down, right? 80, 70, 75, 80 pips, right? Then when it closed above, it continued up 70 pips. Then again, when it closed below, it continued down 100 pips. When it closed above, it continued 100 pips, right? Then it came back, touched it, reacted to it, went up 160 pips. Came back, touched it, went up 122 pips. So that is an important level. If you go down to the H1, it's visible on the H1 as well. Closed above, they closed back below, came down, closed above, continued to go up, came down here, closed below, came, reacted here, closed above, continued up, came down, reacted here, went up, came down, reacted, went up, came down, reacted, and now it's trying to push up again. Same thing on the M30, very important. Same thing on the M15, important as well. Okay, so that is why I want to see an M5 or M15 candle try to close below for us to continue down. If M5 or M15 candle in the New York session closes below, that M5 or M15 candle has more significance than a candle that closes below this during dead volume time. And what I mean by dead volume time is the hours that are in between the uh, the first 2 to 3 hours of the open of the session. So for example, when the Asian session opens, the first 2 hours, there is volume, first 2 to 2.5 hours. After that, until the Frankfurt Open or until the London Open, the hours in between is dead volume, right? The few hours. So the first 3 hours of the Asian session open has volume, has a little volume, not a lot of volume compared to London and New York. Has some volume in it. Then after those 3 hours, until the London session or the Frankfurt session opens, those hours are dead hours, right? Then the first 2 to 3 hours, let's say 2 hours, 2.5 hours of the London Open has volume, and then from that time until the pre-NY session, which is an hour before New York Open, those hours are dead hours, right? So a candle that closes below this during dead volume hours and during volume hours mean two different things. They're not the same. They're not at all the same. So in the New York session, if a M5 or M15 candle closes below, that's a lot more significant than if a candle closes below this during dead volume hours. Okay, I hope that's clear. So that's why if a M5 or M15 candle closes below this gray area, we're very likely to continue down. Very likely to continue down. We pull back up to grab liquidity, we create a top wick, and then we continue down. Right now, there is nothing. We're in between this range, 125 pip range. We're just right in the middle of it. We're doing nothing. Yeah, we're probably just waiting for NYSE volume to come in. Probably waiting. That's 45 minutes from now is the NYSE open. Hmm. Nothing. Hmm. Candle needs to close above this to go higher, close below this to go lower. Simple. Just wait. Just ranging. Okay, so I'll be back in a few minutes. I got about 11 minutes for the 1 hour candle to close. Uh, let's see where this candle closes. If it closes in between this, then the next candle has to either break the low or the high to continue in the opposite direction. Okay. All right. Okay. 5 minutes for this hour to close. 4 minutes for this hour candle because we have pushed above that resistance level. Yeah, 5 minutes is closed above, close clean above, so we should grab liquidity. We should head up. Um, yeah, very similar to what happened yesterday. Price is doing something very similar to what we did yesterday. So um, in the London session, I mean in the New York session, we just continue to push up. We had news around there. That was the news candle, and then we continue to push up even higher during NYSE. And that's very similar to what's happening today. We're just pushing up, we continue to go up. um, Price did react at this here, but I wouldn't have taken this trade. Um, like I drew this, this was a high liquidity. This candle, okay, it came here, reacted in the London session, and then it came again. It came back in the New York session, reacted to the same candle. So I generally don't take the second reaction. The first reaction, good. I, I took it. If price hadn't come here in London, if it had stopped short of it like it did here in the Asian session, then I would have taken this trade. I would have got in at this candle. This is a liquidity wick. This is grabbing liquidity from that candle, or this candle, or even this candle is grabbing liquidity from this candle that we had marked yesterday. Both of these candles are grabbing liquidity from this. So you can draw the fib on either of them, right? So you can draw the fib on that candle, or you can draw it on that candle, doesn't matter. And the stop loss would have been there. It would have been a very small, about a 10, 15, 12, 11 pip, 10 to 11 pip stop loss. Even smaller, maybe 6, 7 pip stop loss. And then we could have taken the move up. But this happened already here, so I don't take the second reaction. I take only the first reaction. But that doesn't mean to say that the second reaction doesn't work. Sometimes you have second, third, fourth reactions, even they work. But the first reaction to me is always the high probability setup, right? That's what I'm doing here. That's how I trade. Low risk, high reward, high probability setup. To me, this has a lesser probability than, because it's the second time it's coming to this candle, right? This candle here is the second time it's coming to it, and this is the first time it came to it. So that has the most probabilities in that candle, and this has a little less probability on that, so I want to take the one with the most probability. Um, Also, this was a liquidity wick in itself, 26, 27 pips, and it came to this candle. So yeah, we touched the sniper entry of that 12 pip stop loss, 95 pips, because that was a liquidity wick in the London session as well. They're all a reaction to this demand zone here, with this H1 demand zone that took out that zone. So I'd drawn it earlier, right there. They're all a reaction to that demand zone that took out that. So that's a high liquidity zone. That is why we have so many touches from this high liquidity zone pushing up. Price is ranging. This is the extreme. This low area is the extreme. The top area is the other extreme. So price is reacting to this lower extreme, this area, this extreme area here at the bottom, and it's pushing up because we have a lot of bullish volume. On the high time frame, price is pushing up. So on the daily, yeah, we are pushing up. We might just continue high now, break through this and just continue higher. We might not come down for to grab to grab more liquidity, and that's fine. If it doesn't, then I don't get a trade today. That's okay. I got one in the London session, so I don't not gonna worry about not getting a trade in the New York session. Yeah. Yeah, this zone shouldn't hold. Technically, this zone shouldn't hold because A, we have a lot of bullish volume, price pushing up. We have coming to that zone already once. We are heading there for the second time. So we could maybe get a small reaction and then break it. So gotta be very careful about that zone. The break might happen at with the NYSE open. Either break below or a break above might happen with the NYSE open. We got to wait. Yeah, we closed above. 1 hour closed above with no top wick. Grabbing liquidity from here, grabbing liquidity from there. Maybe grab liquidity, come down, grab liquidity, and then continue up. M30 closed above, M15 closed above, M5 closed above. Obviously, all these candles closed above. So now maybe grab liquidity and continue higher. Yeah, we're going to break this. We should break this high. This is the, yeah, I should break this high. Continue up. Just look on the M1 time frame what that looks like. Um, yeah, yeah, no top wick. M30 has a liquidity grab from that area, but on M15 no top wick, so we're gonna break above this easily. Another 18, another 20 pips. We're gonna break above this. Once you break above, you should break above this high. Once you break above this high, we should break above this high. We should continue higher. And then we got to see what happens here in this area when it gets deeper into this area. If we're going to do what price did yesterday. So this we had a zone drawn here. Price broke it, pushed down, closed above it, then closed back into that zone, and then came all the way down for the rest of the day. Continued down 80 pips. So once this candle closed, at the close of that candle, we came down about 60 pips for the rest of the day. Nothing much, very little volume. But then for when the Asian opened, we pushed further down about 80 pips, 85 pips, and then we started the climb up. So we're going to break this high now. Once you break this high, we should break this high as well. The momentum is there to break that high as well if once this high is broken. Yeah. It's important to read in candles. Read in candles is very important. Uh, it's more important, as much as it's important to read them at key areas, not just anywhere. Because, as I said, there is dead volume time and then there is volume time, right? So now this is important because this is happening during the New York session. This was also fairly important. This was the London high, right? This was kind of fairly important as well. Was it here, the London high? Sorry, this was the London high. This was the move up, the London move up. This is not the London high. Sorry, that's the London high. But now we've broken above, almost broken above this high, so we should continue to the next high there. Yeah, we should continue up higher. It's just ugly. Um, yeah, actually, I did kind of miss something. There is H4 support there, which I did miss because it's so ugly. Um, yeah, it's so ugly that I did I did miss it. There is a demand zone there, so drop and a rally, right? So there is a demand zone right there, which is what price reacted to. So if you go down to the H1, um, it's not clear on the H1. Maybe the M30. No, not clear on the M30 either. It's not clear on the M30, and it did not take out anything on the left. So I wouldn't have considered it a high liquidity zone anyway. Wouldn't have considered that a high liquidity zone anyway. But there is demand there. A drop and a rally. But it didn't take out a significant high, an opposing high. It didn't take it out. Um, but that's that demand zone that this candle is reacting to, is pushing up from, is this demand zone. So maybe clean it up low 268, 268. It's not clear on the, yeah, that's too steep to take it all the way up there. Drop base in candles and the rally. That's too steep. That's too big to take it there. But yeah, that's the only one. Yeah, that's the only way to draw it. Close 2910. That's the only way to draw this zone. So that's a drop, base in candle, base in candle, base in candle, leg out candle, rally. Two same color candles pushing out from the base. Drop, base, rally, right? Demand zone. But the reason I missed it, it was so ugly. I mean, look at it. It's just really ugly, and it's not a high liquidity zone because it didn't take out an opposing zone. This move up, this rally didn't take out anything on the left. Even on the M30, it didn't take out anything on the left. There is nothing here. There is no supply. If there was a rally and a drop and it took out that, yeah, maybe, but there isn't anything. It's just pushing up from demand, which can happen because we have a lot of bullish momentum on the high time frame, so it can happen. Price can come to a weaker demand zone and then just push up from there. That can happen because there's a lot of high time frame volume. So you can have lower time frame weaker zones working because of the volume of in the high time frames on the daily and the weekly price is pushing up, right? So these lower time frame weak demand zones can work because price is pushing up on the high time frames, but not always. But this is, if you really dissect it, this is exactly what happened. There was a drop there, right there in that wick, is a demand zone which price came down to. But the only way to draw the demand zone is to include these basing candles in it. So then here, price came back, and that is the liquidity grab in that demand zone, this wick here. This is the liquidity grab, right? In this demand zone, this is the liquidity grab. So this is a 27 pip, and price came down to the middle of it. Yeah, so 12, 13 pips and pushed up 127 pips. 12, 13 pip stop loss, 12 pip stop loss, no, 10 pip stop loss, right? Came to that's the middle, it's somewhere there. Yeah, so about 12 to 13 pip stop loss and pushed up 127. But it's better to draw it on the H4 than the H1. Sorry, 25.45. I like that. So that's better. That's exactly where price came to. Pushed up. It also aligned perfectly with a few other things, right? Aligned with this support level that we had drawn. Early on, we had said price needs to close below it. When price was here, so on this candle, we said price needs to close below it to continue down. But it reacted to that support level. That's the wick, the liquidity wick that price reacted to. That is H4 demand. H4 demand. It's in alignment with the EMAs. Price is kind of trading above the EMAs, pull back, and we created kind of M30 support here to continue up, right? So price did create a high, pull back, created M30 support, and now we retested this high. So we broke above that high, right, as expected. We broke above this high, we broke above that high. Yeah, now we just, that's interesting. Hmm. 14, 13, 14, 18. I don't know. I'm not entirely convinced because this move down took out that. So there is liquidity there. The price has already come there once. Six, 102. 6, 7. Yeah, I'm gonna I'm going to wait for NYSE to open. It's 15 minutes from now. So which means I'm going to wait for this 15-minute candle to close. I don't want to get trapped like I did yesterday, trying to take a trade 16.15, 16.15. The price just continued to push up, right? So I'm going to wait for, but we have created a huge wick there though. That's a massive wick, 34 pips. Sorry, if price gets up there, that's an engulfing candle. 67. We could just, the only thing is we could push deeper into the zone. That is that 15-minute candle. Yeah, we could push deeper into this candle. Could push deeper here. Nine nine four three two seven. 4. 3827. 3827. 3661. That's the area price could come into between these two green areas or higher. So that's, yeah, it's quite a way. M5. Mm. 28 pips. 30 pips. No, that's too much. That's too much. Oops. We are coming there. We are coming there. 61. This close is 710 right here. That's a drop, base, drop. 28 pip stop loss. Not that bad. It's 1.10. This candle. This candle. That's the candle I'm interested in. We've already touched it. That's the candle I'm interested in. And price is continuing to push up. 994661. 4661. Yeah, we are continuing to push up. We are continuing to push up. Yeah, we are. So we're going up there now. Am I willing to take a trade there? 30 pips. Am I willing to take a trade up here? 10. Stop loss above that. High 39.94. 39.94. 40.34. Yeah. 30, modify. So 27. 40.34. Okay, we did get triggered there. Okay, we did get triggered there. Just taking a very small position there. Let's get rid of that. Let's get rid of we're going higher. Going deeper into that candle. Close 38.49. Okay. Okay. Took a very small position there. Stop loss is about 20, 28, 29 pips. Um, anticipating price to come down to at least there 40, yeah, about 40 pips, 45 pips down there, and maybe even this low if there is volume. Yeah, somewhere there. 32, yeah, about 50 pips. Yeah, we do have a reaction there now. I don't think price might go higher. We've got to wait for the 50-minute candle to close. Let's see how this 50-minute candle closes. So we're reacting to that 5-minute candle there. That was the liquidity grab, that candle there where the box is drawn. I was expecting to come deeper in. Yeah, so 20 partial positions have already closed at 20 pips. We are dropping, so I don't think we're going to come deeper into that candle. I was anticipating somewhere to the mid level of that candle, to price to come to the mid level of that candle. Yeah, we're just falling now. Should come here. Should come down. Yeah, I was anticipating price to come a little deeper in to get another position, but we fell right from that um, level that I had marked. I'd taken the supply zone there, drop, base in candle, drop, and touched it, and it dropped. Yeah, it dropped 37 pips, touched and dropped. I don't know whether they're gonna come deeper. It'd be good if he came a little bit more deeper to get in a bigger position to ride it down to these levels here. Because on the M5 we have support here. So we've got support there. Price has to close below this to continue down. It's a shame that we didn't pull back. We just pushed up and the next one just went down. 38 pips. 5-minute candle closes below this. We are coming down here. We're coming down another 30 pips. 5-minute candle closes below this. We're coming down here. Another 30 pips. 35 pips. Now, this is the NYSE open. Now volume could just come down and push price down. That's very possible. Since we've grabbed liquidity, price can just push down now. This is just too quick to get in another trade. It just took my limit order. I took my pending order, my sell limit, and then straight away down. There was hoping another candle would go up there, but I'm just gonna take that down to 70. $29.30 there. 70, yeah, 70 is good. 70 pips. If we come here, then the trade should close. If we come to 2630, 2630, yeah, that was a nice supply zone, 5-minute supply zone in this big H1 H1 supply zone and the H4 resistance area. This is a H4 rejection area and H1 supply zone. So there was H4. The reason we drew this is because of H4 rejection. And when we went down to the H1, there was a clear area. And if you go down to the M30, well, it didn't get there. But in H1, it was correct. How we had drawn it in H1 was correct. Rally, base, and drop. And we reacted there. The price needs to close below this gray area, this gray line, to continue to this. And closes below this, then we continue to this. Two, three. Five. Pushing back up from the support. If price comes to my entry, I'm going to close this trade. because I don't want to. This is too much of a stop loss to take if price goes against me. So I'm going to close this trade. It comes back to basically if it breaks this M30 high, right? So that M30 high, if it breaks it, there's no need to hold that trade because you're going to go high. We can, if you break this M15 high, then we're very likely going to go deeper in. So there's no need to hold drawdown. 37.33, 37.53. Just keep a 2 pip. Yeah, keep 4 pips. Keep 2 pips for spread. That should be enough. If you break this high, we've broken the low of the M15 candle. If price is to continue down, there is no need for it to break the high again. It has no business breaking this M15 high because it's already broken the low. Okay. On the M30, we're still trading within the M30 range, which is about a 63 pip range. We're within that range, so that's fine. But we've broken the M15 low, so there's no need for now price to go back up and break the high. If it breaks the high, then we are very likely going to continue high, and I'm not interested in holding drawdown. I hate drawdown. I'm not going to hold drawdown. So I'm going to close, the trade's going to close right there, just above that high. If it is to come down, then it'll probably make a top wick and then continue down. But a 5-minute candle needs to close below this gray area for it to continue down to this gray area. That's where I'll get out of the trade, 2630. Because there's a lot of resistance there. The EMA is there. There's a lot of resistance there. I'm not going to hold this trade. If it comes down, then I'm going to get out there. 2630 is where I hope price will come down to, but there is a 50-50 chance of price coming there or continuing up. It's always a 50-50 chance. Just remember that when you take a trade. 50% chance of winning a trade, 50% chance of losing a trade. Those are the best odds that you're going to get in trading. Yeah. This high is 733. So we came down 47 pips from my entry, right? Yeah, 47 pips from my entry. Now we're ranging. Now it's the NYSE open. So 15 minutes, 30 minutes, very likely that price will use the first 15 minutes, 30 minutes, might use it to grab liquidity to decide on before it decides on the direction. So that's probably what's happening right now. So we just got to be patient and wait. If a 5-minute candle closes, 15-minute candle closes down here, the 15-minute candle is going to close in 5 minutes. 5 minutes, yes. If a 15-minute candle closes down here, great, that's good sign, then we're coming down. But if it doesn't close down here, then we're pushing up. And once this high breaks, it's very likely going to go up and break that high. The next 15-minute candle breaks this high. The next 15-minute candle breaks the previous 15 high, then we're going further up. So there's no need to hold this trade once price starts to break M15 highs. And that's the best, that's the rule. That's the rule for the best rule that you can use to manage risk. Managing risk is the name of the game. So that's the best rule, the M15 time frame, right? So if you're in a sell trade and price goes in drawdown and starts breaking M15 highs, start closing positions. There's absolutely no need to hold positions. Absolutely no need. So this is seems like it's pushing up, right? We got 3.5 minutes for this candle to close, and if this closes a bullish candle, then we are rejecting this support. So the next one is going to go up and break that high. We have to close. We have to reject the red area and close somewhere here. And the next candle needs to break the low. If the next candle doesn't break the low and goes and breaks the high, there is no need to hold this trade. Absolutely no need to hold this trade. I'm going to just close the trade right there with about 10-11 pips in profit on the position that is left of that trade. Yeah, we rejected the support, pushed up. We're rejecting this area. Rejected, trying to come down again. Uh, 2 minutes for this candle to close. We're pushing up. $602. 3602. The next candle comes up to this high, breaks this high. I'm closing the trade here, right here. Because if it breaks this high, then it's going further up there. It's going back to my entry and it's going above that high. So it's the likelihood of that happening is higher. Once the high is broken, the likelihood of that high getting broken is higher than price continuing to come down, right? So we did close a bullish candle. We pushed up from the support, the M15 close, so probably creating a bottom wick now to continue higher. No top wick on this M15 candle, so it's probably creating a bottom wick. I'm gonna if it had created top wick first, then maybe makes sense to leave it, but it didn't create a top wick. It just came down straight away to create a bottom wick. So So we are gonna push higher on this. Yeah, we're pushing up. We created a bottom wick instead of a top wick. So created a bottom wick and there is no top wick there. So the M5 closed bullish, rejected, closed bullish here. M15 closed bullish. Yeah, there is. Go up there. I'm going to close it. Close the trade right here. So I'm going to use the trade manager. When I hit this button, it should close. As soon as price gets up there, if I hit this button or I press any one of these buttons, whatever that position that is left should close. Yeah, I'm pushing up. Is this a liquidity wick from this support to continue up? Could be. Still don't have a top wick on that M15. Came close, but we don't have one. We need to close below here, M5, but also we have this wick here. You got to keep in mind this wick. Price did reject at the mid of this range. But if there is volume, NYSE volume, we could push down. We could just disregard that we can continue down if there is volume. If there is no volume, then this entire area could act as an area to grab liquidity to continue high. So that could be the M15 bottom wick, which is probably what's happening right now. Yeah, that's the liquidity grab to go up. Could be, unless an M5 candle closes below this. I'm going to wait. I'm going to wait for price to come up here. That's where I'm going to close the trade. Right here. As price comes here, breaks this high, or maybe breaks this high. Yeah, I'm going to bring my stop loss above this candle. 2636. 2636. Okay. Perfect. That's 10 pips in profit. It's broken the low. This candle has broken the low. There is no reason for it to go back and break this candle high again unless it's planning to go up. If it's continuing down, it has no need to break this candle, the previous candle high, because it's broken the low. It should continue down if it is to continue down. If it breaks the high, then that means we're heading higher. Yeah, we are heading higher. That was a liquidity grab to go higher. It's stopped now. Perfect. Yeah. Okay. Just as expected. That was a liquidity grab this wick and this support level, 16 pips to go up. That one, that M1 candle. This wick here, grab liquidity from support to push up. Sorry, now we're heading, we've broken this high now, so we could go higher. Now, I might just delete these pending orders. Yeah, because price is rejecting this support now to continue deeper into this zone. And I'm not going to hold pending orders there because we've already come to that candle, right? We already came to the M5 candle. We came into it. We dropped 50 pips, 55 pips from that M5 candle. Now we're coming back. Let's get rid of that. The only bit that's left of that M5 candle is on the M1 time frame. Just that. Close 38.49. 38.49. That's the only bit that's left of this M5 candle. All of that that area has been consumed. This bit is left. Stop loss about 15, 16 pips. But I don't want to take a trade there. Broke a high. On the high, we're reacting to support to come up. Yeah, I'm not going to take a trade there. I'm going to just watch what price does when it gets there. We got news in 5 minutes and we got the 4-hour close in 5 minutes. So I'm not going to do anything right now. I'm going to just watch. So this 4-hour is closing bullish and pushing up to fill this wick. So the next one could easily go up high and fill the wick and go even higher. This was the area for the New York session. So in NY session, price grab liquidity from this H4 demand zone here. Also an H4 support level right there. We drew this line here, H4 support, H1 support, resistant turn support, M30 resistance and support, M15, M5, all of those things right there, that gray area. So price grabbed liquidity right from there and then pushed up 130 pips. So the next candle could continue to push up. So we're not going to do anything right now. We're going to just wait for the candle to close. So it's very likely doing what it did in the New York session yesterday. I said this several times already. We pushed up, and in news you might just have a price just pull back to create like a bottom wick to grab liquidity, and then continue higher. That's what's very likely to happen. Yeah. So when this 4-hour candle closes, do we have a new zone? Yes, we do here. Okay, let's just get rid of all of these. We don't need these anymore. The candle is going to close in 3 minutes. Don't need any of that anymore. Let's get rid of all of that. Yeah, so now this becomes a demand zone, right? In 2.5 minutes, when this candle closes up here, this becomes a rally, base, rally, rally, basing candles, base, 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 5 basing candles, and rally. Provided this candle closes up here and it doesn't come down and close back here below this resistance. If it closes below the resistance, then it's nothing. Then we don't have a leg out. This candle has to close just like this or higher. Then we have a base here. Then we can redraw this. Couple of minutes more. Let's see. I might be here for another 30 minutes, and then I'm going to call it a day, because that'll be my 2.5 hours to 3 hours of trading for the day. Yeah, I'll be here till 10:30 New York time. 10:30 a.m. New York. Yeah, a minute and a half. Let's just see. This candle should close above here, 39. The higher it goes, the better the move out, push out. Um, yeah, the next 1 hour candle is gonna break this, gonna go higher and break this. If the H4 candle closes up here, the next 1 hour candle is gonna go up further and break this zone. But it's ugly. This is not your usual H4 or H1 supply demand zones. This is not your usual. This is just crap, because we've been ranging for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 44 hours we've been ranging. 44 hours. It's just absolute garbage. Absolute dog shit. Just 44 hours of ranging. Just ranging here to here in 150 pip range. We've been just bouncing. Okay, so that price broke the high as expected, should continue high. Yeah, we should go up. Should continue to go up there. Okay, that's news. So we expected a pull back down, so that's the pull back down. Expect a pull back down. They were expecting whatever they were expecting. It's a really unimportant news event. So they were expecting almost the same numbers and came out as bad numbers. So price should continue higher. So we could have a pullback and then price should continue higher. This is a liquidity grab from here. We're not going to do anything because price has already come in there and consumed that area. So we're not going to do anything right now. We'll just leave it. We want to see if what price could do what it did yesterday, where we close above and then close back below and come down. We're going to wait for that. That might be the only other opportunity I'm waiting for here, because it's unlikely that price is going to come down all the way down here 170, 180 pips in the next 30 minutes, right? That's very unlikely. 30 minutes or even in an hour, that's very unlikely that that's going to happen. That will come down 200 pips. So yeah, we are pushing up. Let's just grab some liquidity, but we are pushing up. Yeah, so let's just redraw these zones. Let's get rid of this now. Yeah, so that's what worked today. That was the liquidity candle of that H1 demand zone. Price came there to the sniper, 12, 13 pip stop loss, and pushing up. One should go up 160, 170 pips, should continue to push up. Okay, so that's done. Now let's get rid of that. Let's just redraw this supply demand zone now. Okay, so we have a rally, we have a base, base. This is included in that base, and we have a move out. Okay, now let's see if we can refine it on the H1. 917. Ooh, it's pushing down. No, this is just grabbing liquidity to continue up this M15 candle, just like we did in this candle, just like it did here. We're coming down, grabbing liquidity from this area to continue higher. So this was supply. This was supply that got broken by this move. This move started down here. Let's go to the 30-minute. Yeah. Low 268. 268. Okay. Okay. So that is the base in candles and the move out. So we refined it using the H1 time frame. So on the H1 time frame, if you go down here, it's that wick, and if you go down to the, it's not even clear. On the H1, it would be here. I would have to bring this down here. But there is no base. So to find the base, I've got to go to the M30 time frame, and on the M30, it's clear, right? So that's the low 268 and that's 733. 733. Okay. This is a high liquidity zone because this zone took out that H4 supply, right? This zone broke this rally base drop. Supply zone was broken by this move up that started here. So this is a high liquidity zone now, right? This is a high liquidity zone. Get rid of that. Get rid of all of that. Just want to see what price will do when it comes there. Yeah, let's get rid of that. It's not important anymore. Okay, so get rid of this as well. Price came to that candle now and it's continuing up. Okay, so this is now the high liquidity zone. Price has to come down 100 pips for that, for to grab liquidity here to continue up. That may not happen in the next 30 minutes. So, but the reason I'm drawing this is because I want you guys to understand where is the low risk, high RR or high reward, high probability area to take a trade. It's not the breakout here. That is not. That is the worst risk. That is the most risky place to take a buy trade is up here, in this anywhere in a red box, right? That is why in the group I mention it every day. Do not take buy trades in red rectangles, and do not take sell trades in green rectangles. That is the worst possible place to take a trade, to take a buy trade. Okay, sell trades absolutely fine, but worst possible area to take a buy trade. Now this is the done our analysis after the H4 candle close. It Yes, it ticks all the boxes. It makes sense. That doesn't mean this area has to work. It's a probability game, right? So you want, if you had a gun to your head and you asked to take a buy trade or get shot, where would you take a trade, right? Here is where I would look to take a trade next. This one, or even down here, or here, or here. These are the areas. Nothing here. Absolutely nothing here. In this 130 pip range, no. Right? Anywhere here? Absolutely not. 125, 130 pip range, nothing. This is the area, right? Because this demand zone took out that supply. It's clear on the H1 as well. You have supply there that was taken out by this move up. You have a rally, base in candles, and a rally, right? Leg in, base, 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 leg out. This is the leg out. Okay, this also is sort of the leg out. This one and this one, right? So two same color candles pushing out from this base, which is great. Now we want to narrow that area down because it's really ugly on the H4. So how do you do that? You go down to the H1 and you refine the zone. You refine it, right? You don't start drawing it on the H1 or you don't start drawing it on the M30. You always start drawing it on the H4 for session trading, always on the H4. So you draw it on the H4, you come down to H1, you try to refine it. So if you were going to refine it based on only the H1, then the zone would start here, right at the base, the open of this H1 candle. But because there is no base, to me, I always want to see a base in candle. So a drop base rally, right? In this case, we're looking for demand, drop base rally. So we go down to the M30 and it's very clear, drop base in candle, rally, right? So that's the area that I'm waiting now for my next opportunity, which is very unlikely to happen right now because this is in the next 20 minutes is the end of my trading session. So it's very unlikely that's going to happen now. But if if all of this happened an hour and a half earlier, great. This would be the area I would wait for a trade. But this is now outside of my trading hours, so I'm not going to wait, not going to be doing anything right now. this is a liquidity wick, grab liquidity. So you're going to pay extra attention to that area. So let me just grab this one. Okay, so the high of that is 707, the low is 356. Let's put those digits down, 707, 356. And just watch this area, see if price comes down there, either later today or in the Asian session or London session tomorrow to get an entry. That's all you do. That's as simple as that. We are pushing up as expected. We're pushing up because we've already grabbed the liquidity of that candle. So there is no reason for it to continue to react. That candle, there's no reason for that candle to hold any more sell orders to push price down. So we're going to go deeper into that candle and very likely break that high. Because if you go down to the M5, yeah, we've consumed this candle entirely now. So if you look at that candle is consumed. Here, that's the trade that we got in. We got in right there. It came down about 40, 50 pips from our entry, but we took partials and the rest we closed before price got to break even. So both positions we closed in a little bit of profit, but I took a very small position. I was expecting price to come a little deeper to get a bigger position, but it didn't. It just tapped it and straight down. So now price has come, consumed all the orders in that candle. That was the liquidity grab candle. It came, consumed all the orders, and now it's going to break that high. Okay, so get rid of that. Now if you look at the M5, look at that candle. That is a liquidity wick. Okay, that M5 candle in the NY session. Very important. As I said, there's a difference between this candle forming right here at this time as opposed to this same candle forming somewhere else during a dead volume time. This is a high volume time. You've got this candle. So this candle is an important candle, M5 candle. So I want to see price coming into that candle, which is about 28 pips, ideal, to get a move up. All right. That's the low risk, high reward, high probability trade right there. That's where we want to wait. It's a probability game. There's no guarantee that it's going to work, but it's a probability game. That's the place that I would want to take a trade. Any day, anytime, that's where I would want to take a trade. All right, a minute for the 15-minute candle to close. Yeah, I'm going to end the session now. I'm going to end this session now. It's unlikely that in the next 15 minutes price drops down 125 pips to give me an entry. So yeah, I hope the session was educational. I was able to add some value to your trading. If I didn't, then ignore this. Don't watch any future videos. But if I was able to add some value, then continue to watch, like and subscribe, and continue to watch this channel. I'll be doing these sessions every day, hopefully into the foreseeable future. All right. Okay. So I'll be back here tomorrow to do exactly the same thing. We'll do a analysis, H4 zones, look for our high liquidity zones after that, and then wait for price to get to them to take a trade. Okay. All right, guys. See ya. Bye.